Hi, everyone, and welcome to our panel entitled Inclusive Growth in a Digital Era, Priorities for the Future. A little bit about this area, I'd like to start off with a few facts. The 2021 Global Findex showed that over the past decade, more than 1 billion people have gained access to basic financial tools, but more than 1.4 billion people are still left out, and reaching this population will be much more challenging. In this session, leaders from across the nonprofit, development finance, and private sectors are coming together to discuss the priorities needed to ensure the financial system works for all. And we're noticing there are initial steps and progress in the direction for growth and inclusion. And I'm excited to kick off the conversation with global leaders as they discuss how we can create a more encompassing framework that can build trust, strengthen accessibility, and usefulness of financial services for vulnerable populations and unlock equitable opportunity for everyone. And now I would love to invite our panelists to please provide quick introductions so our audience can understand the amazing leaders we have included in our conversation today. Who would like to begin first?
Michael Schlein, I'm CEO of Axiom, and congratulations to the Center for Financial Inclusion and Financial Inclusion Week. This is terrific.
Hello, I'm Andrew Torrey. I'm the Regional President for Visa for Central Europe, Middle East, and Africa. Thrilled to be here today.
Hi, I'm Juliet, and I'm the Chief Sustainability Officer for Jumia, and I'm very pleased to be here as well. Excuse me, good morning. I'm very pleased to be here on the panel today, and congratulations to the Center for Financial Inclusion for organizing this as well.
Good morning, good afternoon. First, thank you very much for having me. Congratulations for organizing this event. So my name is Jean Pem. I'm the Global Director for Finance at the World Bank.
Amazing. Thank you, everyone. And for those listening in, I'm Christina Trampota. I host the FinTech Growth Talk and love working with everything in the world of FinTech, financial services, and how this world continues to evolve. So let's kick this off. Well, let's start with the Global Findex. This was updated by the World Bank earlier this year, and we saw some promising progress on financial inclusion. We've reached more than 1 billion people over the past decade, but we know the next billion will be even harder to reach. And so we're going to start this off, and we'll see a mix of insights shared by our panelists. So my first question for the group is, how has the Findex data informed your approach? And what needs to happen differently to reach the next billion with inclusive financial services? Let's kick it off with Michael. Love to hear your insights.
So thank you. And look, let me just take a step back and say, in our lifetimes, we have seen enormous progress on moving people out of poverty. And many of the people who are part of Financial Inclusion Week have worked their whole careers towards that end. And we have seen hundreds of millions of people escape poverty. And for the first time in our lifetimes, that trend is now moving in the wrong direction. We're seeing tens of millions of people fall back into poverty. Poverty, hunger, inequality, famine, they're all on the rise for the first time in any of our lifetimes. Yet the Findex data shows that over the last decade, more than 1 billion people joined the global financial system. If you put those 2 points together, this is a once-in-a-lifetime moment. The work that we do is more urgent and more important than ever, and we have an opportunity to come out of the pandemic and build a much more inclusive world, and that's really the task for all of us. The data coming out of the Findex is enormously important. You mentioned 1.4 billion. We actually tend to focus on 1.8 billion because it's not just the people that are left out, it's also the people that are really poorly served by the global financial system. 1.8 billion is really 1 out of 3 adults. So that's our real, and then as you point out, the next billion is going to be harder to reach than the last billion. Who are they? They're smallholder farmers in rural areas, they're women, they're low-income families, they're micro businesses, they're gig workers. It's precisely these groups that we need to target. There's some other great, interesting data coming out of the Findex as well. Findex is telling us that payments are actually opening up other financial services. We always believe that would be the case, but now we're really seeing the data that proves it. 4 out of 5 people who received a digital payment also made a digital payment. And of the people making those payments, 40% of them saved formally and 40% of them borrowed formally. All of that means we're really making progress moving from payments and access to real usage. Another point, after many, many years of frustratingly staying stagnant, the gender gap narrowed significantly from 9% to 6%. But that's not really the full story. Almost all of that progress came in India that almost eliminated its gender gap. And yet there are still other countries like Nigeria and Pakistan and Bangladesh and Tanzania that have double-digit gaps. So there's much more work to do. The Findex, to your question, the Findex is hugely relevant and important in driving our entire strategy. I'll stop there.
Thanks, amazing insights and a great foundation for other insights that we're going to hear from our panel. And Juliet, what comes to mind when you see this study and the data that was shared?
Yeah, thanks, Christina. And incidentally, last week we were at CGAP and we talked about this report and looked at the implications. I think that a couple of things jump out of the report for me. I would, of course, agree with quite a lot of what Michael has already talked about, but a couple of things jump out. One is that it now requires, it asks the question about design imperatives as far as financial inclusion is concerned. So that's one key area. The second one is then we begin to look at then at what level, what are the thresholds where governments have to play a much more active role in laying the framework and the backbone for financial inclusion. And Michael mentioned also what India has done. So a lot of those successes we're seeing in India are because there were prior investments in a couple of areas. One, universal identity system, universal internet services, universal payment services. So those kinds of things lay the backbone on which financial inclusion then services and products can then be built around. Now that's one on design perspective and calling out the responsibility and the need for public sector investment there. When it comes to private sector, and here we come in with fintech and other solution providers come to play. Some of those excluded populations that were called out in the report. You have women, you have the poor, you have the less educated. When you look at it at a broad level, it doesn't really give you that much information in terms of what do you then do to be able to address the needs of the next 1.4 billion until you begin to unpack it. And that's what we need to do. When you say women, we really should be saying people who perhaps have less flexibility to act independently because there is a man who's a husband in the house. If the mobile phone happens to be the most expensive capital asset that is existent in the home, the man is going to want to hold on to it, right? So the woman will not have access to it. She doesn't have access to it. Whatever apps you put on it are not accessible to her. Those are the kinds of questions that we begin to ask from a design perspective. When you say the less educated, it's not so much education, it's the fact that we're building for a text-based solutions, right? Whereas we should be talking about voice, we should be talking about natural language processing. These are the basic things we should now be building into solutions that can reach the next 1.4 billion. So there's a lot around design that we need to start to think around. And those are the things that really came out of the report. The final one I will touch on is also who pays for it. So of course, NLP is expensive to develop, right? Building out these networks is expensive to develop. So what are the revenue models of the future? They have to change. And, there are multiple partners that need to get involved now beyond just straight-jacketed public sector or straight-jacketed private sector. So these are some of the things, some of the new considerations that are coming up that really jumped out for me from the report. But I'll echo what Michael said also. There's been a lot of progress. It's just a different kind of mindset, a different kind of thinking around reaching the next 1 billion.
Thank you. And I agree. I mean, growth is challenging, especially once you get to the stages where each additional million or billions or whatever your metric might be is going to be harder and harder because while we have a growing population, at the same time, the complexities are there, whether it's who has access, who is left out, is there the appropriate funding? Is it coming from private or public sources? And the technologies as they evolve. Some evolve quickly and jump past different layers in different markets. I find that fascinating through my experiences over the years, working in both mobile and payments. Both of those serve as platforms to empower and enable many, but we all need to understand where we can link those together to move forward. And I want to remind our audience listening in, if you have any questions or ideas that this might spark for you and your group, please join us and add that into the chat on your screen, because we do have a team that's listening in and collecting those questions for us, and we'll address those as well. And the second question that I'd like to present to our panel today is, what does the next stage of digital and financial inclusion look like for the international community? Did the last week's World Bank meetings offer additional insights we should consider? Andrew, do you want to start us off there?
Sure. Let me just take myself off mute. Thank you, Christina. So, I'll just echo some of the things the panelists said. Michael talked about, it's a bit of the best of and worst of both worlds. So we're seeing significant geopolitical dislocation, macroeconomic challenges, people falling back into poverty. I happen to be an optimist by heart, and last week was certainly invigorating when you think about real consistency. If you just heard what Michael talked about and Juliet, and I talked to Jean as well, there's going to be a lot of consistency about what we need to do to get universal access. The Findex data shows real progress there. 71% of adults in developing economies now have access, and there's been 8 percentage points of growth on average from 2017 to 2021. That's all right and good. And I agree with the panelists that the next 1.4, 1.8 billion, however many you want to count, it is going to be trickier. 29% of folks are still excluded. And, the panelists were talking about payments, electronic payments are certainly an entry product to get people into more formal financial services. And even of those included, 43% still use cash entirely. And why that's so important is we know that there are worse outcomes from folks using cash. Our Visa Economic Empowerment Institute has done some studies and modeling on it. And if we got to 100% universal access across the developing world, it would equate to an incremental 6 percentage points of GDP growth. That's $3.7 trillion. And that is a lot of benefit to be distributed across communities and economies across the globe. So we're very, very focused on that. Access is critical. In 2015, we had a commitment as a company to bring Visa branded payment products to 500 million people over the next 5 years. We achieved that in 2019, but we're not resting on our laurels. We deeply believe that working with new players and wallets in particular are important. We just launched a partnership in Kenya with M-Pesa, where we're bringing Visa credentials into 30 million mobile wallets in Kenya. That's really important. We've also done a study where that's emblematic of what we think are some of the ways we're going to reach consumers. We just did a study together with DevEx about the digital economy, and and how participation in the digital economy is critical. We know that income gaps are widening. The digital economy offers, and participation in it offers, the ability to bring more wealth and really kind of level the playing field. Yet we know there are still significant challenges associated with it. Some of it is around mobile broadband. We don't talk enough about access to mobile broadband, not just access, but affordability with mobile broadband, which is such a critical piece of infrastructure. We know skills are so important. Financial literacy, education, it is critically important. And then skills combined with trust. Trust is critical. Consumers need to know that their products protect their money, protect their data, and protect their identity. So good progress, a lot of work to be done. And those are some of the things that we've been focusing on.
Thank you. That's great to hear and really understand a little bit more about areas you're focusing on, different areas in the studies, and how they all link together to this common theme that we're discussing here today. And Jean, we'd love to hear your thoughts. How can you link this together from your area of expertise?
Thank you very much, Christina. So let me start where Michael started, which is that some of the news we are facing and some of the development are quite concerning. I mean, the poverty number, the bank just issued the 2022 Poverty and Just Prosperity Report, increase in poverty. So we are going backwards. The global financial situation is quite worrying. So I think we have quite a bit of bad news, and we need to pay attention to that because it actually links to the discussion we are just having on financial inclusion, including from the resiliency perspective. So I think Findex is super important because Findex gives us data to analyze and to understand what's going on. Actually, the bank also issued last week the little book of data, which is on financial inclusion, the ability to compare the situation country by country. So that's quite important in terms of benchmarking and helping authorities understand where they are and how much more they need to be done. There were lots of discussion on financial inclusion last week, including an event that we organized on Saturday on building resiliency, financial inclusion, and digital. So exactly the discussion that we're having. It was actually very inspiring to hear from Her Majesty Queen Maxima, Managing Director and representative from public and private sector on the progress made, but also the challenges. So yes, a lot of progress on access. The reform that took place before and during the pandemic set the scene to be able to go to digital, and then a lot of push on digital financial services. So I think it's important to remember that this is also the result of years of policy reform, in particular on opening the market to new players, promoting innovation while managing risk, a government really making an effort in terms of G2P, or the payment, the cash payment, social safety net, extremely important, and also simplification on customer due diligence and KYC. So somehow, a lot of people were very careful not to let a crisis go to waste and really move with digital financial services. So that led to a lot of progress. But as all the other panelists mentioned, we still have some gaps, very important gaps. So the gender gap we just discussed, MENA, Sub-Saharan Africa, 13 points, 12 points respectively. That's still very significant. Income gap, including in regions such as East Asia. Rural-urban gap, also a very important one. So all of this is first, the pandemic and the Findex has shown that digital financial services works, and we need to leverage that. There are still gaps, and we need to target better and really go to this underserved population, either completely excluded or insufficiently served, as Michael said, and continue to focus on that. One of the critical elements from our perspective is to move from access to usage. So use cases, product design, digitalization of business. We have big usage gap in South Asia, in MENA, high account dormancy in many countries. So this is also when they have an account, they don't use it. We think that expanding merchant acceptance is really critical. And in our view, the shift of government payment beyond social safety net, in everything, utility bills, pensions, agricultural subsidies, really moving the government to use digital much more systematically is a very strong incentive. It brings volume, it creates a market, and then hopefully it also brings some element of trust and facilitate access. So you see that there is a potential element. Resiliency is going to be very important, the ability to support communities. So that's where also there is a role for the private sector and public sector. And that's also where the link with the crisis, the shocks that we are seeing, short-term, the one at the moment, and the potential one related to climate are important. Two additional things going forward. One is to bring the end user perspective. They are concerned by the user. There's a lot of work to be done on consumer protection, on literacy, addressing issue of data privacy, and now to provide trust. Andrew mentioned that. So that's also related to the role of the public sector in terms of regulation, closing the digital divide and focusing on the most difficult to reach, including by thinking of what kind of products could be useful for them. And this can only work if it's part of a broader thinking on the evolution of the financial sector. We are seeing the tech revolution. And one very important element that I saw during the discussion with the bilateral last week is it has moved from purely payment and purely access to other type of financial services, saving, credit, and also an ecosystem approach. It's linked to the digital economy. So you are seeing that transition and really countries moving from one stage to the other. This is where we see a lot of hope. It's very inspiring. So it's time to double down. Back to you. Thanks, Christina.
Thank you. And that's a great wrap up, summarizing everything that was discussed in the recent World Bank events, from the studies to how this links back to others, data points as well, focusing on access, trust, design, and really understanding this from the end user. Because if we want to keep them coming back and really using this and adopting these new behaviors and types of payments, savings, commerce, all of the above, we need to make sure it makes sense for them and what works for them as a user, as an end consumer. And this brings us directly into the next topic. It's so exciting to see that we have seen some movement. Underserved populations are gaining access to digital tools and platforms, but ensuring that these underserved populations have the skills and knowledge necessary to consistently use and apply these is complex. And there is continued risk we have to keep in mind, because we don't want to leave certain populations, such as women-owned small, medium enterprises, small farmers, all these others that might be seeing impacts of climate change, leave them behind. Some of our panelists already discussed this as well, whether it was lack of access to the mobile device, maybe not having the budget controls in the household, or simply just how can they even get this digital access? So what are some of the risks facing these populations, and what can we do to address their specific obstacles? That's a question for our panel, and I'd love to begin with Juliette.
Yeah, thanks, Christina. I think I'll home in on MSMEs and also women MSMEs in particular, because you mentioned that in particular. I mean, if I look at Africa as an example, we have 96% of MSMEs are actually micro enterprises. So by the World Bank definition, these are people who are employing maybe 1 to 10 people in terms of annual turnover. They're doing probably maximum $100,000 or thereabout. And when you look at that whole cohort, about 54% of them are actually traders. This is coming from a McKinsey report that was done in 2020 during the pandemic. So if 96% are micro entrepreneurs and 54% of them are traders, then at this point in time, the biggest challenge they have is actually access, sourcing raw material, resiliency in their supply chain is a big challenge they have. If I also look at our own data point on Jumia, where we have that in our largest markets like Nigeria and Kenya, about 51% of all our sellers on our platform are women. So if you have all that together, then you see, look, quite a number of these sellers and traders and micro entrepreneurs in Africa are women. And the big challenge they have is inflation right now. It's, of course, that's a global issue, but then really impacts MSMEs much more on a very, very deep level. And secondly, like I mentioned, is the supply chain resiliency of the supply chain. Now, if I take a simple, like a seller of fashion items, a trader of fashion items, MSME who trades in fashion items in Africa, and I ask him, what is the impact of the flooding in Pakistan on your business? He's not going to know. He doesn't know Pakistan is the 4th largest cotton producer in the world. And potentially that's going to have an impact in terms of pricing down the line, right? In terms of where he's sourcing his cotton t-shirts that he's selling either on Jumia or selling on his own in the open market. So we talk about embedded finance. What that tells me is that we have to broaden our conversation around embedded services, right? Because how does such a seller have access to that information that allows him to be able to plan for the future? It's predictive analytics. It's information in terms of geopolitical problems, shifts in pricing, shifts in raw materials, and how that's going to impact pricing in the next 3 months, in the next 6 months, in the next 1 year. So as we design our fintech platforms, as we design our services, whatever they are to support MSMEs, we need to think beyond, okay, we're embedding finance into it, we're embedding payments, we are embedding insurance into it. Now we start to think about sourcing. Do we provide some information that helps them to figure out how do they effectively make their supply chain more resilient? How do they start to plan around local sourcing? The world is getting less global to some extent, more disruptive. We should expect more unpredictable matters like disruptions and shocks. So all of that are issues that are going to impact MSMEs, and we need to start to plan and design around additional kinds of services that are embedded within the services we provide today that would support MSMEs.
Thank you. Very insightful, especially linking to so many data points, how it applies in different markets and the other studies. And Jean, I'm curious what other research and data you might have to highlight this and share a little bit more with our audience about what's taking place and where we can focus more for MSMEs.
Thank you very much, Christina. So there are different dimensions in your question. So let me try to unpack it a little bit. So the first element is about financial resiliency. And I think it's really important to focus on that at the moment. I mean, Juliet just said why we need to be ready to those risks. And I think there's a macro element to that question, which is the more you develop financial services, at least to a certain point, the more the economies are able to allocate capital and risk better. And then that leads to more resiliency at the macro level, higher economic growth, larger reduction in poverty and income inequality. There is also, I mean, at the moment with inflation, there is a link between developing financial inclusion and the ability to respond to inflation, including because the transmission channel for monetary policy are working better, but also when there are public sector response, including social safety net, you're better able to target and to deliver, as we've seen during the pandemic. So that's at the macro level. At the micro level, there is an increasing number of evidence that financial inclusion is a means to an end. It helps reduce poverty, improve the life of the poor, women in particular, and it facilitates the daily financial transaction, but also help them better prepare. So I think that's why thinking about this in terms of credit, savings, and protection, financial protection is extremely important. And we need to really think about a suite of services. And that's the part where DFS have also been extremely useful. So we see that going forward. Part of it is to understand what are the risks to which different levels are subject. So sovereign firms, I'll come back to MSME in 1 second, as well as households. Now, there is also the other part of the question, which is risk related to digital financial services. And there we see 3 priorities. One is it's around consumer protection, and part of it is to prevent over-indebtedness. So yes, we want to have access to credit, and on the other hand, we don't want to put these households and individuals in over-indebtedness. The second element is that there are new ways to deliver credit, to provide credit, and the regulatory parameter needs to evolve. So usually you think about institutions, so you have banks, you have non-bank financial services. Suddenly, including because of the platform that are coming, the embedded finance point by Juliet, you see new service provider, they don't fit into the bucket. So rethinking the regulatory parameter to be able to manage, ensure that the opportunities are being seized, but at the same time, risk macro and micro are being managed is extremely important. And then really come back to that issue on financial consumer protection. Last point on MSME. So we're actually working on a study, including learning the lessons of what happened during the pandemic. And there is very clear evidence, first, that access to finance really increases the productivity of MSMEs. It's a debt financing, but it's also equity financing. There is a strong link between innovation and equity financing. But one of the key findings is that the MSMEs that had access to finance before the pandemic were much more capable to absorb the shock and to survive. So that's another additional evidence and incentive to make sure that we provide services that helps MSMEs absorb the shock in addition to growing. And I mean, we can come back to that question later, but there is also that clear evidence coming in the long run and ensuring that MSMEs contribute to private sector-led growth and increase productivity. Back to you.
Thanks. And that's a great link into our next conversation point, talking directly about MSMEs. And as you highlighted, it's a big issue. We're looking at this on who are you reaching, addressing all the risk that's involved in these services, and ongoing research that will continue to take place as we watch the economy and the user behavior evolve over time. So in this MSME audience, so this stands for small, medium enterprises for those who are participating and listening in, these are facing a tidal wave of challenges right now, thanks to the uneven recovery due to COVID, the war in Ukraine, and skyrocketing inflation, worsening climate change, ongoing supply chain issues, just to name a few of these. And simultaneously, more than ever, people are using digital financial tools to improve their livelihoods, to build resilience. So from your perspective, panelists, what are some of the specific challenges you're seeing in emerging markets, specifically with the health of these MSMEs, and where are opportunities? Where do they actually exist so we can actually create that economic recovery that is truly inclusive? And I'd like to kick this off actually with Andrew.
Thank you. So, the panelists were certainly talking about MSMEs, and I think the importance of them cannot be overstated. They are the lifeblood of economies around the globe, especially, as you mentioned, in many of the emerging markets. In Africa, for example, 90% of businesses are MSMEs, and they account for 50% of employment. They are bedrock of the communities across many of our nations. And if you think about it, they are still incredibly excluded. And if you want to get universal, there's a clear link in a two-sided market like payments, right? If you don't have these MSMEs included, there's less incentive for consumers to start adopting electronic payments. So you have to work collectively to bring them both up to solve this chicken and the egg problem. And there's still so much exclusion there. We made a commitment to digitally include 50 million MSMEs over the next 5 years. And that's really important work. We think about 4 major avenues that we work on across the ecosystem to solve it. One of them is technology. The other is partnerships. The next is really creating the next generation of entrepreneurs. And then finally, skill building and capacity building. On the technology side, Juliet and many of the other companies out there have vital infrastructure. We've also continued to develop our own infrastructure with our global e-commerce gateway and acceptance in the cloud to be able to use some of these tools to really approach and work with these MSMEs. Partnerships are critical. Our business is built on this. We've launched Tap to Phone, which is the ability to scale through a small Android-based device, a $15 device to accept payments. So there's no longer a $300 standalone point of sale. You can embed software directly to allow small and micro merchants to operate. We've worked with, for example, Paga in Nigeria. They've got a mobile app. They've got they're a fintech that has a mobile app and an app called Daroki to serve merchants. It allows them to work in store and online. And what they've been able to do is get them to accept payments and also then use our credentials to immediately push settlement to those merchants so they have access to those funds and then also make payments. So you can kind of see that virtuous circle there. We've been working with, and we've just piloted a project for a digital marketplace with MTN, where we're using our technology, a company called PaySky, to provide a digital storefront in Uganda to support many small and micro merchants really start to be able to sell their goods in the digital economy. So partnerships are critical. The next generation of entrepreneurs is also really important. We've got a FinTech Fast Track program. We think FinTechs are incredibly important. We've worked over the last 5 years to be able to support them, bring them into the ecosystem because they're really additive when we can bring them in and get them to partner across the ecosystem. They're the ones who are providing a lot of these last mile solutions to consumers and merchants, and they really focus on this end user experience. We also work really hard to get entrepreneurs to solve the problems of today on the ground. Every different market, you heard about different countries and different outcomes. Payments are a local business and you need to solve for the challenges on the ground. We've done a series of Visa Everywhere initiatives, which is just think of it as a competition where we allow fintechs to come in, use our network, use our expertise, use expertise from players across the ecosystem to compete and build new products and services. We provide financial compensation, but what's more important is they often get introduced to other players in the ecosystem and they get access to capital. We've been doing this for the last 5 years, and over the 10,000 participants that we've had, they've collectively raised about $5 billion. So there is a lot of capital seeking payments, and we hope we play a small role in providing them with a little bit of an opportunity to do that. And then skill building is really important. We talked about financial literacy before, practical money skills. We're doing a lot to engage the youth and gamify it very, very early on to be able to get them to learn how to use money responsibly. And and we talked about women-owned small and micro businesses. We've got a program called She's Next, which we're working together with Women's World Banking. And it works with female entrepreneurs to help them invest in skills. We work with them on skills, capital, and coaching. Frankly, women, we found, can learn a lot more by working with other female entrepreneurs. So we bring that together. So those are 4 things we think about to really digitally include MSMEs.
Thanks. So many different programs, channels, and outreach taking place there. And Michael, I'm curious to hear your insights. Where do you see these different innovation opportunities, whether it's fintech, embedded finance, all these different ways that there are so many more ways that we can create economic recovery?
You know, and Christina, in your question, you mentioned the current challenges of COVID, Ukraine, climate, inflation, but even before all that, lending to micro and small enterprises was very, very challenging. Traditional banking likes collateral. They don't have any. They like formality. These are informal. They like audited financials. These companies don't have them. So this has been a big challenge. We are seeing tremendous innovation, and we keep talking about the digital, the digitization. The reason that's so important is in a cash world, these micro and small enterprises are invisible. When they go digital, all of a sudden they become visible, and all of a sudden you can find ways to lend to them. And that's what's so exciting. And that's why we get so excited when we see the digital acceleration. And as terrible as the pandemic was, we did see tremendous digital acceptance, which is exciting. But it's not so easy. CFI did some research during the pandemic on MSMEs that did start using mobile money actually started going back to cash towards the end, which was disappointing. And only 10% of MSMEs in India, Indonesia, and Nigeria were selling on digital platforms. And women were less likely to use digital tools, which made their challenge during the pandemic even harder. So there's a lot going on here. You talked about, you mentioned embedded finance, and Juliet mentioned it, and Andrew touched on it when he was talking about trust. We think embedded finance is a very, very exciting, relatively new way of bringing financial services to people who've been left out. If you think back, it used to be you had to go to a financial service provider to get financial services, whether it be a bank or a microfinance institution. And increasingly, in just the last few years, we've really figured out that the key to unlocking financial services is data. And we've seen that every company is a data company. So that means every company has the potential to be a financial service provider. This is really a big deal that we're excited about. If you think of traditional banking, it's sort of passive aggressive. You have to jump through a bunch of hoops, and then maybe you'll get a loan for a certain product, but basically you never get what you need when you need it. In fact, traditional banking sort of gives you exactly what you need when you don't need it. But embedded finance, really, you're in the middle of a transaction and you can get exactly the amount that you need when you need it. And going back to trust, these are companies that have already built relationships and are already reaching the people we're trying to reach. So we think there's a lot to do here. And again, there's some of the trends, the challenges are enormous, but the opportunity is also very exciting.
Thank you. I agree. There's so many opportunities ahead. We all need to work together and understand all the different details. And I'd love to hear from Juliet. I know you mentioned some of this before with embedded finance and how critical that was. And I agree, almost everybody needs to really be a fintech company today. Used to be like everyone is a software. Now it's like everyone is a fintech company. So I'd love to hand it over to Juliet to discuss this, especially about embedded finance.
Yeah, thanks, Christina. Yeah, so I actually love the word. So it's a new term that I've come up with. I call it embedded services, right? So because that means it's a little bit more than finance, and I'm sharing that from that experience we have. We serve MSMEs, like 92% or probably 90% of sellers on our platform can be classified as MSMEs. And they need a lot of services, a lot of support. They don't have their own logistics services. We do that on their behalf. They can't set up their own payment services infrastructure. We've done that also on their behalf. And in some markets, we've also provided and link them up with lending providers. We act as facilitators to link them up to lending providers on our platform. So those are all services that we need to start to think broadly beyond just those kinds of services. What else can we do? We provide also insurance services. We provide rating services for them in terms of they understand how the consumer, whether the consumer likes this product or they don't like that product. We provide digital marketing services as well. So there's a whole suite that we can do within a non-financial space that ultimately has impact on the financial well-being of an MSME. So I think that's just the narrative and the mindset, rather than the pure finance mindset, is all the activities that ultimately translate into financial health of the MSME. Those are the ways in which we're thinking about it, and that's the way we're building out the services and the scope of services that we provide for MSMEs.
Thank you. That's inspiring and really informative also for those who want to follow and see where additional developments are going. And Jean, we'd love to hear, where is the innovation going in this MSME lending space?
So as I mentioned earlier, we are doing quite a bit of analytical work on that, first to check the facts, but also to see what are the trends coming. So we have a paper that we published, a suite of paper actually, that we published in May, which is called The Future of Finance, and really looking at fintech more generally. So both the new players, but also our technology is transforming how incumbent traditional players are providing financial services and the opportunities and risks coming to that. Let me focus on the second paper, which we'll publish by the end of the calendar year on MSME related to that. 4 messages. 1, access to finance does matter. We show and evidence that it has an impact on firm investment and productive growth and ability to manage shocks. So I think we know it, but we are bringing evidence of that. Second, we've seen a lot of innovation thanks to fintech on SME lending, both bank and non-bank. But at the moment, non-bank remains very small in emerging markets. So there's a huge potential there. And the question is really scalability. It comes to one of the questions on the chat, which is how can we facilitate that? The role of regulators to provide the right balance between safety and innovation is extremely important, but also opening markets to new players, which may not be bank. So that issue of the new service provider and improving the regulatory parameter and the approach to innovation is extremely important. Third, it's not just about debt financing. Equity financing is really important, in particular to foster innovation. There's a lot of innovation in emerging market. At the moment, they have difficulties finding equity financing, so we need to invest in that. It's an ecosystem issue, but that's something that is very important. And the third element is that there is a digital divide. So we've discussed that from the start. There are still gaps. We need to invest on those gaps. And one of the key elements is also to help on the other side. And maybe that's what Juliette means by embedded services. It's not just about the money. It's also helping the SMEs to digitalize. And there is still a lot of work to be done in terms of their management capacity and how SMEs are organized to really leverage digital. Thanks.
Thank you. And this is key. It really links well into our next topic, which is how global stakeholders work across the sectors with policymakers in order to create a more encompassing framework that builds trust, strengthens accessibility and accountability, and builds the usefulness of financial services for vulnerable populations, while still unlocking equitable opportunity for everyone. And let's start off. Actually, I'd love to hear from Michael. And because of our timing, we have so many questions coming in. Let's keep this kind of quick. Can you share more?
Sure. First of all, we work, everything we do is in partnership. We're a small organization, but we've over time worked with partners all around the world, and particularly on the regulatory side. The CFI partners with the Economist Intelligence Unit to do the global microscope, which evaluates 60 countries on the regulations and policies they put in place to promote financial inclusion. And so it's enormous global transparency. If you want to see who's doing mobile money regulation well, you can actually see it all there. And it's enormously valuable if you're on the other side. If you're a regulator, you can figure out who do I talk to if I'm trying to figure this out. For example, We're working, Vice President Harris has created the Partnership for Central America, and we, along with the MasterCard Center for Inclusive Growth, are working in partnership with El Salvador, Guatemala, and Honduras to do a lot of what we're talking about, to bring digital tools to people that have been left out, to really, and if you think of it in that particular context, not only are digital tools faster and better and cheaper, but they're really safer. And of course, that's a region that has difficult issues with drugs and violence. And so we've seen significant progress, though, of course, it's early days. That's going to take a long time.
Thank you. And I'd love to hear from Andrew a little bit more, especially on Visa's Economic Empowerment Institution.
Yes, so just to keep it brief, so we can move on, I will just say we also work certainly across the ecosystem. It's incredibly important. I think one of the things we've seen that's become a real big trend is around governments in particular. So governments have been a driving force in digitizing commerce and payments projects, and there's a lot of cross-functional, cross-stakeholder partnerships with governments, whether it's allowing them to lead from the front and make sure that they're accepting all of their government payments digitally. We've seen that in many markets. Government disbursement projects, there are many of those. Again, they tend to be better when they're digital. We've seen a lot around digital transformation. The Ukrainian government has a great citizen service app called DIA, where they provide citizen services, and they're embedding in that application payments. We haven't talked about urban mobility, but you can't underestimate how important urban mobility is, especially around inclusion. It is a very big hook, whether it's metros or it's buses or it's trams. Being able to have people use simple payment credentials starts to create habituation and is a real hook to bring people into the formal financial system. Work on cyber and security is incredibly important. It gets to trust and security. We spend a lot of time on cyber workshops. We just did one in Kenya with government stakeholders, FIs, and fintechs. We do campaigns with law enforcement and with regulators on consumer outreach and education to make sure they don't fall prey to phishing or other social engineering schemes. And then standards are critical in any industry. They're critical in ours. Standards around risk, fraud, solutions, and data protection. So there's many, many ways we can all work together cross-sector in these partnerships.
Thank you. And as we're wrapping up today in our initial conversation here, we've covered so many updates and different challenges that are experienced with all of these innovations, but we also highlighted the opportunities for greater improvement and impact out there. So I'd love to hear from each of the panelists in 10 words or less. What do you see in the outlook that excites you? What keeps you going, gives you hope? And we're looking for your feedback. Let's start out with Juliette.
10 words. Inclusiveness is definitely on the top of my 10 words. Impact is extremely important. I would say also, maybe I'll just do 3 words, just because of time. So inclusiveness, impact, and I would say economic, so the joint word, economic opportunities. Everything in financial inclusion is about expanding the reach of economic opportunities for people. So that's the future. It's not just financial, it's about economic, expanding economic opportunities for a wider base of population. More than 10 words, I'm sorry.
Okay. And Michael.
In our lifetimes, we will create a financially inclusive world. That's 10.
Awesome. Thank you. Andrew, passing it over to you.
That one's tough. There's that old adage, I didn't have time to write you a short letter, so I wrote one. I think, for what I'm seeing, what I'm hopeful for is from policymakers to business, there's a real consensus around the economic impact and commercial opportunity of providing life-changing financial services to underserved consumers and MSMEs.
Great, and John.
Okay, so I'm going to try to bring everything. So first, it works. We need to redouble effort and focus on including the underserved. challenge cross-border payments. We did not discuss. That's a major challenge. This is affecting both household, countries, and firm. So this is also what keeps us going, which is we still have very big challenges in front of us. Let's continue to work together to fix them.
Thank you. And now we're going to jump directly into the questions, and we're going to have one answer for each because we're limited on our time. So one of the questions that came in earlier was actually asked, I'm going to read this out loud. While I'm also an optimist, one thing we've noticed is a major driver of financial inclusion were government subsidy and welfare payments, which were key not only for financial inclusion, but stability. However, we're seeing as governments taper off this support and G2P payments, the vulnerable are once again becoming under or unbanked. Are others seeing this trend, and how can we ensure more long-term and sustainable access? Who would like to answer that one? Okay.
I think this doesn't get enough attention. In the pandemic, we saw governments, really 140 governments created more than 400 cash transfer programs that reached 1.1 billion people. It was life-saving, and most of that was reaching people for the first time, and most of that was digital. And so that role of government in cash transfers was enormously important in this digital acceleration. But you're right, it's not sustainable. These governments really stretched themselves. And of course, now we're seeing with inflation and everything else in the supply chains, it's a very, so I think this is a very important issue that we need to pay attention to.
Thanks. And here's a question directly for Andrew. And the question is cash a barrier to financial inclusion?
This may sound heretical. I don't think it's a barrier. It's actually a symptom of the problem. So if you go back to what does it take to solve the problem, we need to account for the fact that we live in a world of cash, and any solutions we develop have to have an on-ramp for cash. Cash still exists because there still isn't enough trust in the system. So any great solution that you look at, especially with fintechs and neobanks and mobile money operators, you have to have an onboard. You have to have something simple and easy for folks to provide cash. Then that gets converted digitally, and then you have to have enough places for them to pay. The same thing has to happen. They need to be able to get access to their cash and be able to use it. And over time, what we've seen is as they see the utility associated with payments and they create more trust, then you stop defaulting back to cash. But we cannot think we can make that jump and take cash out of the ecosystem all in one fell swoop. We need to continue to still have on-ramps and off-ramps that are efficient to really encourage consumers and merchants to come in.
Thank you. And another question that was in the list, how can the public authorities enable the growth of fintech ecosystem in developing markets? Jean, would you like to answer that one?
Yeah, thank you very much. I began to allude to that question earlier. Public authorities on the financial sector side have a major role to play in creating the enabling environment. The job of financial regulators is to think about risk, but they also need to think about opportunities and opening the market. So I think that issue of opening the market, interoperability, the fundamentals that facilitate digital economy, ID4D is a very good example of that. I think when we've seen countries doing a lot of that and it pays, and there are ways to manage innovation without taking too much risk. I mean, sandboxes or the space that can be created for fintech to test is really important and has worked. So we discussed the management of risk for the end user. I think much more need to be done on that. I mean, Andrew mentioned cybersecurity. So this is also how you create trust and go from transaction to ecosystem to some extent. I think that question on G2P is very important. Yes, there was social safety net, but in most countries, even out of the pandemic, there remains government transfer. So, and the poorest continue to need support from the government. So I think preventing backtracking and digitalizing the whole range of government payment is a way to try to continue to do that. It's not going to be easy, but it's really important that we build on what has been achieved and not go backwards.
Thanks. And here's one that I think Juliette would be perfect to answer. Where can digital financial inclusion solutions in Africa that are connecting the unbanked, underserved, and unserved populations get funding from in grants, impact linked funding, because it's a major constraint for us here in Africa? Can you share your insights?
I actually thought Jean and Michael were the best for that one. But anyway, I could take a stab at it. I know there are quite a number of impact-focused grants that are, looking at Africa, focused on Africa. I know there are a number of investors that are private equity investors as well that are looking specifically on Africa and Africa as an opportunity. I know the African Development Bank is also doing quite a lot in terms of providing funding for different kinds of initiatives. They may be sector specific. For example, it may be specific on agro, climate related finance matters, or it may be related to a different sector. So for example, certain value chains of products and the crops. So that could be ways and opportunities for accessing grants for developing specific solutions to solve problems at a sector specific level.
Great, thank you. And for those listening in, we will also have time to add additional comments on the chat after our session ends, but we are on a tight time. So we're trying to limit this to one answer for each question so we can get as many in. And one more that came in: how digital tools allow to collect data regarding clients and portfolio levels, how fintechs can help take into account the needs for small holders for adapted financial solutions regarding environmental events, their need for implementing resilient solutions for the final customers. And they're referring to nature-based solutions, ecosystem adaptation. Basically, what is digital and green inclusive finance? Totally open. Who would like to take that one?
I'll take a shot. We're a very active early stage investor in fintech for inclusion, and over the last few years we've seen tremendous innovation in ag tech, specifically leveraging all sorts of new tools, and this is directly related to climate issues. So, for example, two companies we're involved with, Pula and Apollo, both Kenya-based and now expanding to several countries throughout the continent, are leveraging global satellite data to see and assess and advise smallholder farmers in very remote locations. So they can see when there's a drought, they can see when there's a flood, they can monitor soil condition, they can monitor cloud coverage, and they can provide agronomic advice, and they can provide insurance and credit and a whole tool of support for farmers. And as you know, reaching the smallholder farmers has been one of the biggest challenges that we in this space have ever faced. So we're seeing some pretty exciting new models.
Great, thank you. And I know we have 2 minutes remaining. So one last very, very quick question. I'll even probably read it slightly abbreviated to see if we can get an answer. But it really was looking into the subsidies that are going out. And although with all of this, right, there's many that are being reached. However, there are still the marginalized groups that are out there. And one is the aged population, especially aging farmers, given that it's rising globally. How better to address the senior cohort? And I'll leave this open, from controlling their assets to gaps in overall use and access.
So, Christina, can I try on this one? I'm going to bounce back on what Michael said on agri-finance, because that's a very good example of where we can do more. We have a program in the Horn of Africa exactly targeting on this issue of financial resilience of agriculture in the context of agri. Now, so I think there is more to be done. There is a lot of potential. I think that maybe the older farmer can benefit from that, but that means financial literacy and consumer protection. So that's why linking product development with making sure that the risk for the end customer are managed is so important. And then you design to their specific need. There's a lot of potential there. Back to you.
Thank you. And thanks to our panel. This has been an amazing discussion. I hope the audience has enjoyed our talk today. So join us on the chat. Have a great day and evening, wherever you are in the world.
Thank you.